Hello there, welcome to Talking Econance. Today's video is about a detailed analysis of India's economic growth prospects post-Operation Sindoor. Request you to please like, comment, and share the video and subscribe to our channel, as it is just a few seconds job for you, but it motivates us to create more valuable content on the channel. Also, please press the bell icon to get the latest updates immediately. Let's get started. Tonight, we dive into the economic fallout and future prospects of India following Operation Sindoor, the Indian Armed Forces precision strike on terror camps in Pakistan on May 7, 2025, in response to the deadly Pahalgam terror attack. As tensions simmer, how will India's economy, the world's fastest growing, navigate this geopolitical storm? Stay with us for a detailed analysis. Operation Sindoor, launched to neutralize 9 terror camps linked to the April 22 Pahalgam attack that killed 26, sent shockwaves through India's financial markets. The Sensex plummeted 880 points by May 10th, with the Nifty 50 dipping below 24,050. Historical data from conflicts like the Kargil War and 26/11 attacks shows such corrections, typically 0.8% to 5%, are short-lived unless escalation occurs. Moody's trimmed India's 2025 GDP forecast to 6.3%, citing geopolitical risks, but emphasized the operation's limited scope minimizes broader disruption. India's macroeconomic fundamentals remain a bulwark. With $650 billion in foreign exchange reserves, a current account deficit of just 0.7% of GDP, and fiscal consolidation, the economy is well equipped to absorb shocks. Defense stocks saw a sentimental surge, while financials and telecom remain investor favorites. Experts suggest markets will stabilize if tensions de-escalate. But what underpins India's resilience? Let's explore. India's $3.7 trillion economy is driven by robust fundamentals. Domestic consumption, accounting for 70% of GDP, is powered by a young, growing population, shielding India from global volatility. Public capital expenditure rose 8.2% year-on-year from July to November 2024, fueling infrastructure growth. The fiscal deficit, narrowed to 5.6% of GDP, reflects discipline, while reserves cover over 12 months of imports. High-frequency indicators, GST collections, auto sales, and FMCG growth signal strong demand. Inflation at 4.9% in 2024 is manageable, allowing the Reserve Bank of India to maintain balanced monetary policies. Tax incentives from the 2025 Union Budget are projected to boost GDP by 0.7%, reinforcing growth. These strengths position India to weather Operation Sindoor's fallout, but which sectors are driving this momentum? India's economic engine is diverse. The services sector, over 50% of GDP, grew 8.3% post-pandemic, holding a 4.3% share of global services exports in 2023. IT and financial services thrive on digital infrastructure like UPI and Aadhaar. Manufacturing, powered by the Production-Linked Incentive Scheme, surged 9.9% in FY 2023-24, with electronics and pharmaceuticals leading. Agriculture, at 16% of GDP, benefits from reforms like ENAM. Operation Sindoor highlights India's defense sector, with indigenous production poised to add 0.3% to GDP by 2030 through exports. Employment trends, with doubled EPFO payroll additions, further bolster consumption. But global trade and geopolitics pose challenges. How is India navigating these? Operation Sindoor has strained India-Pakistan ties, but Pakistan's fragile economy, $131 billion in debt, $10 billion in reserves, limits escalation risks. India's non-escalatory stance preserves South Asia's 5.7% growth projection for 2025. Globally, a potential 28.2% U.S. tariff on Indian exports could cut GDP by 0.3%, challenging the $1 trillion export target by 2030. As China's growth slows to 4.8%, India attracts supply chain shifts in electronics and textiles. FTA talks with the EU and UK could boost exports by 10%, 15% by 2030. Digitalization and AI centers of excellence enhance India's global trade edge. Food inflation, at 8.4% in 2024, driven by vegetable prices, 26.56% in December, strains consumption. Regulatory complexities deter private investment, with net FDI at $479 million in 2024. Climate risks threaten agriculture, and geopolitical escalation could trigger 5%, 10% market declines. Yet, India's long-term outlook is bright, with a $7 trillion economy projected by 2030-31 at 6.5%, 7% annual growth. The PLI scheme could raise manufacturing's GDP share to 21% by 2031. Services exports may hit $400 billion by 2030, and defense exports $25 billion. Structural reforms could unlock 8% growth, aligning with Viksit Bharat by 2047. How can India sustain this trajectory? We wrap up with recommendations. To sustain growth, India must deepen deregulation for MSMEs, diversify exports into green tech and electronics, invest in climate-resilient agriculture, strengthen financial governance, and maintain a non-escalatory geopolitical stance. Post-Operation Sindoor, India's economic resilience shines, with 6.3%, 6.8% growth projected for FY 2025-26. Strategic reforms can propel India to a $7 trillion economy by 2030, cementing its global stature. That's all for tonight. For more updates, visit News Channel website. I'm Anchor Name. Good night.